What's up, members? Just going to look at our daily look ahead. So today is the 29th of August, and we're going to be moving into the 30th for tomorrow, which is Tuesday. Let's have a quick peek at what's going on. So, as I sort of mentioned, I guess today, when we had all met, it's very simple to see, right? And you just have to be able to read the details that are actually in play. Don't allow, a bunch of room for interpretation. Let's just play out the facts, right? I think Cash said it, Mr. Gino. We're like lawyers trying to build a case, right? Every time you add a piece of, oh my God, what would you even call that? Evidence. There's the word. Anytime you're adding evidence, you're building a better case, right? Evidence in our case is what we know as confluence. So what are the facts right now? Facts are this. Basically, what's happening is we've broken swing, right? It's perfect. Swing structure has broken. We've got a strong high, ideally, that's taken liquidity. So good area to be able to trade from. Now, one of the things that often gets overlooked or looked into too far is the breaking of with wicks or with full body closures, and depending on the time frame that you use, there's always going to be a body closure and there's always going to be a wick closure, right? So don't weigh into that too much. And what I mean by that is, like, if you look across here, yes, we've got a body closure, but it immediately snaps back in. So a lot of people get really worried about that if we start navigating up into here, right? And to a certain degree, you can weigh that in as like I said, an added confluence if you wanted to. But the bottom line is how we deliver into this POI is far more important than whether or not we've broken with a wick or a body down here. So don't throw a bunch of weight on this. Ideally, we want liquidity concepts in check. We want a level that people will trade from, which is here. We also want to be able to see a push down, which we can actually trade. And then furthermore, looking for more liquidity to build into deeper portions of the POI to be able to then take this alongside EOF into daily lows. If and when, of course, that presents. As things develop, things change. As it stands right now, my picturesque sort of setup is that corrective behavior into the origin of this move. Now, can we play counter trend stuff? Be my guest. There's all kinds of moves in here. There's all kinds of moves in here that you can play. Personally, they're not my favorite. That's just the way that I roll. I always like to take stuff that aligns with trend. Which way are we trending? It's very simple. Boom. Down, correction, down, correction, down, correction, right? So keep it simple. Premium, discount. Where do we want to trade from? We want to be trading short here, here, and here. Till that happens, I'm not even fucking concerned about what's happening in the market, okay? Anyways, that's the end of my TED Talk. GU, same shit, man. We've just broken down. You can see that this is kind of leading the pack right now in relation to EU. We've just had that expansion out. Here's your initial drive. The drive gets swept, comes into something in here. I don't think that there's anything in here that we could really play, to be honest with you. I think now we could maybe look at maybe this breaking down and then coming back into this overall POI range and then possibly playing a continuation. But again, depending on if your idea comes from this leg, make sure that you're targeting here, right? If your idea is coming from all the way up here, right, which obviously we will retrace back at some point or another, and it'll obviously take some time to do it, you have a much larger RR range that you can start to capitalize on with several different scale-in models. Aussie dollar, similar, very, very similar. Coming into this region right here, might see a nice little push. I don't think there's going to be enough to fucking take out the lows. I think likely what's going to happen is we're going to push through here and then probably get a blast into here and possibly even higher, to be honest with you, into something more up in this region. Looks like we're building enough liquidity to be able to facilitate the move, but right now the highs are weak, right? We're not taking out anything of substantial relevance other than this area, but we've done it in such a weak way. I would be very, very concerned about what's going to happen, that's all. And can we look in here? Absolutely. It comes from a take. Now we obviously don't have liquidity to take, liquidity inducement before the POI, at least on this time frame. So we'll have to look for lower time frame inducement to sweep into the POI to then take this alongside expectational order flow if and when those confirmations sort of develop. So just be mindful of these things while we're obviously formulating trade ideas. GJ simple, man. Like this thing's gonna take off. It's probably gonna come up into here at the bare minimum before we see sort of like the next trade play out. So just be mindful of this. And again, if you want to take longs, be my guest. Look for POIs, down move before up move. Look for lower time frame realignments, and then look for order flow to essentially shift or realign rather, sweep, and then possibly look for continuation model to the upside, targeting that next supply. And then looking for the sells from there, if and when they present, of course. So Euro JPY, this is one of the more interesting pairs for me this week. I'll be watching this pretty heavily for sells. I'm just going to get rid of this stuff. I'll be watching this pretty heavily for sells in the next little bit. Obviously, we've just seen a liquidation. Now, could we go higher? Of course we could. Here's the most recent break. We could come all the way up into this region up here. So just be careful how these things sort of develop. But we've just taken an oh my God, what's the word? A large amount of liquidity out of the market across the equals. And now, ideally, the market is going to want to navigate down to these areas to see whether or not demand is going to continue holding. So taking this down into this demand zone is something I would probably consider, and look for this tightening of the range to be able to then take this down to the downside if and when it presents. So just be mindful of how these things work. Right now, demand is controlling the market. Order flow is bullish, and what we need to remember is that in order for us to realign, we're going to need to see a pullback, a sweep, a break, strong high, and then be able to take this down. So again, we're ways away. Focus on quality, man. Quality, quality, quality. 1, 2, 3, 4, 6 trade setups max in a month. Let them play out. Hit the bangers. Hit the ones that you know how to play. You don't even need 5 seconds. Use everything that we use in the 5-second model on a 1-minute chart. Same exact thing. All you're doing is cutting out one confluence. Totally up to you what you guys want to do. USD CAD. Okay, we got the sweep. Ideally, we're going to want to watch this come into the overall range that takes liquidity, possibly start taking this downside, right? At least that's the way I'm viewing it. A lot of imbalance to fill here. There's also, we're barely breaking above, which isn't a huge deal, but we're now starting to mitigate deeper portions of the overall supply range. We've got liquidity to take. We had inducement. POI gets swept. Boom. All the confluences that we look for are there. Look for your lower time frame stuff now. 15-minute, 30-minute, whatever it is that you need to be able to see realignments and execute based off of whether or not we get one. Okay, this was the homework that I assigned. Again, just have a look in here. Look in here, right? Read the trade plan. Read read the POI flow chart. Read the higher time frame to lower time frame checklist. What is being met in here? I'll tell you right now, there's a bunch of stuff. Okay, just watch for it. Look for it. Read it. Have it side by side. Print it out on your fucking desk. You know what I mean? Have it there. Check it off. If you have a flow chart, literally draw it in with a Sharpie. Draw it in with a highlighter. Make sure that you're understanding how these things operate. We don't leave things up to chance in the market. It's very, very simple. We operate based off of very strict rules. Why do we do that? Because it fucking works. Does it work every time? No. But if it works 30% of the time, 1 week, and then the other time it works 60, and 65 the next, and 25 the week, like, the thing is our risk reward is so fucking high that it doesn't matter. Strike rate is irrelevant. We take trades that fit the plan. And as you get better at deciphering the market and understanding the key component that we teach, which is the liquidity concepts, this is where you can really, really start to take the subjectiveness out of the market and really start to tailor this trade plan to your own. Okay, so that's it for this. I mean, ultimately, like I said, I'm looking at gold to hopefully, hopefully continue to the downside. I think we're going to get one more run at this. Potentially come into this area right here, this overall supply range that does take liquidity on a lower time frame. Once we do, look for those confirmations, continue into EOF lows. Simple. Keep things simple, guys. Don't reinvent the wheel. Don't try to catch a falling knife. Don't try to catch a top. Just understand order flow, right? Understand what's going on. What's going on? We just broke the low. Okay, so if we've broken the low and we're going to continue downwards, and that's the expectation, is that we continue to come take out this low and take out all these levels, what's the next thing to happen? Probably going to entice early sellers, right? Sweep early sellers, get people buying. When we get too many people buying, we get liquidity underneath these lows, right? Boom, that comes down, we come back up, we fail to take out the high, people are looking to trade long, and that creates liquidity for our move. There's a lot of things that need to happen in here for it to actually happen. And what happens is when you get in a little bit too early, you have to hold through drawdown. But when you start to read the details on lower time frame and you wait to be this guy as opposed to this guy, you can get yourself into some very high RR trades that happen very, very quickly. And I think that's what everybody wants, is to be in and out as quickly as possible so that they do not have to manage their emotions while managing a position. Hopefully you guys enjoyed. I will catch you guys tomorrow. Peace out.